The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, folks, if you'll remember 9 months ago, almost to the day, we had a person here on the as a guest that said that Donald Trump was going to win in a landslide, and we have that young man on the line right now. Samuel Archibald Arrington Hicks Crawford from Tucson, Arizona. Are you there, Sam?
I am here.
Probably one of the greatest calls in the history of the financial markets, my friend. Congratulations. Fortunately, we had a couple other astrologers like Bill Meridian, Norm Winsky, and Shane Smolian that, said pretty much exactly what you did. But you were first. I have to give you that credit. By the way, today is Shane's birthday, so let's wish Shane a happy birthday. Sam, what do you see now, buddy? What's going to happen? We've had volatility like we haven't seen in about 3 years last night. So what are you looking at right now?
Well, the last paragraph on the bottom of my recent letter, which came out October 31st, the November letter, says, analyzing the skies over New York and Washington, we think that the most likely time for a market crash is November 14th to 17th. Considering that, we would expand that to November 8th to 21st. And, of course, it crashed last night. What was it, down about 835 at the low?
Yeah, that was limit down.
We will keep our 200% short and remind you to stock up with extra cash, food, water, gas, ammo, batteries, matches, candles, paper goods, and anything else they do in Florida when expecting a hurricane. Include gold and silver and whatever comforts you may desire over at least the next 2 weeks.
Wow, I know it's going to be. Do you really see? We've talked a few times, and you've said that there's a possibility we could even see martial law. I don't. I remember Marshall Dillon, but I've never seen martial law. So I hope that doesn't happen. But anyway, we'll have to wait and see how history, makes it look. Anyway, as far as the long-term outlook for Gold Arch. We've had a $9,000 move in gold. We had 7,000 up and, 3,000 down here just in the past 8 trading hours. And it's going to be, I guess, pretty volatile from here on. What are you seeing in gold and silver?
Well, I saw it go up about $64 last night. And then it's, of course, backed off from that. If we get over the old resistance at 1350 to 1360, then I think it'll go to our original projection of 1440. Mm-hmm. That's intermediate to long term. Long term, I think it will go much higher.
Yeah, I believe so because we had a normal correction of about 3.5 months. And it stopped at pretty strong support spots in the gold and also in silver, and it's certainly acting like it wants to. Arch, the silver is actually acting better than gold. I mean, it didn't move as much last night, but it didn't back off at all. There was more buying coming into it, all along. So that's an interesting phenomenon also.
Well, there's not as much paper silver as there is paper gold, and they can manipulate the gold easier, I think, and long term, I think overall the silver is probably the better value. But
okay,
in last night, I thought the most dramatic move was the dollar index, which dropped from 98 to below 96, right down to the 200-day moving average almost. Mm-hmm. And then it came all the way back to 98 today. Now, if you know that trading currencies, the public has to put up like 5%, and the big traders put up much less than that, and that's a wipeout in a few minutes last night over a very, very short period of time. And if they were able to hold it, it's back even this morning, and up 11 cents on the dollar index. But that is an extreme move. I don't know what the actual dollar did in terms of other distinct currencies that were trading in the night. But I imagine that in Japan it was a different story. In China, in Hong Kong and Shanghai, it was a different story. And I think it may have wiped out some people there.
Oh, absolutely. The yen moved well over $6,000. The euro moved over $6,000. So those are huge moves. But the biggest move all night, Arch, was the Treasury bonds, the 30-year Treasury bonds, and they're still moving. They had a $13,000 move. They had $4,000 up and $9,000 down. I mean, that's a lot. That's 9 handles in the Treasury bonds. That's that's a time when there should have been a flight to quality, and it was doing the exact opposite of what the traders were expecting, and that's probably the reason for the the big sell-off. But that was a huge move.
Oh, sure it is. And as I said, the gold was up $64 at one point. I saw it, and it's backed off halfway.
That's for sure.
Yeah. So
well, listen. How can the folks get in touch with you, Arch, if they'd like to, see your newsletter and take advantage of your services?
Well, the website is www.crawfordperspectives.com, which is a bit of quite a few letters. If you just Google Arch Crawford, with that would probably bring it up in the first or second or third answer.
Okay, that's good.
The phone number is 520-577-1158, and the email is crawfordperspectives@earthlink.net. Again, that's a lot of letters, but it'll get here.
Well, eventually we do have it. Sam, I don't know if it's windy over at your house, but this is like the Three Little Pigs, and I'm worried about the big bad wolf outside because we've got 35-mile-an-hour winds here in Tucson this morning, and we have an American flag that almost ripped it off the roof last night because it was so volatile, and we've had tremendous wind again today, and the skies are just as clear as can be. So this is highly unusual to see the desert winds this time of the year.
Our flag is flapping kind of wildly too this morning.
Yeah. It's maybe it's the winds of change. Maybe that's what it is, huh?
It could be.
Yeah.
The oil went down yesterday to a hair below its 200-day moving average, and it bounced back all the way too.
Evidently his fracking ideas were supposedly bearish to the market, but then it snapped right back again. So I frankly think he's been a good businessman. He's got as much experience as running a company as Obama had when he came in, and possibly more. Hey, Arch, thanks for joining us, buddy. We'll have you on again soon, okay, pal?
Delighted. Thank you.
You bet. Thank you. Arch Crawford, Crawford Perspectives.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted into the Tiger Den the action in the Treasury bonds last night. Even though we had tremendous volatility everywhere, this one wins the prize. Actually, the one that would really win the prize would be the DAX, because I've also posted that in. You'll notice that it opened at a 127 and 1.618 expansion. It gapped down well over 400 points and then rallied $22,000 in the next 4.5 hours. So this is some of the volatility that you're starting to see in some of these markets. But let's get back to the bonds. They went $4,000 higher, 4 handles. And then they dropped, actually 9 handles to the downside, so it's now been $13,000. Really watch this 159 level in the Treasury bonds, folks, because we looked at that earlier in the week. That is the 61% retracement off of the yearly low. And so we do have similar moves like we had during December. We're having the same type of a similar move now in the Treasury bonds, where we're down 17 handles from the last for the last time. A handle is a major point. In other words, you go from 169 to 168. That's one handle. You don't count the decimal points. That's old trader talk from the Merc, and unfortunately, old habits are hard to break. But anyway, we want to watch that one very closely. Now, the next one that I sent out last night when this was all happening was in the gold market, because gold went down and stopped exactly at the 61% retracement of the October 7th low, right spot on at 1270, and then it immediately rallied, just absolutely straight up to 1339, which is a move of just a little under $7,000, and then it backed off $3,000 down to the 1301 level, and it really needs to hold that. Now, silver has been acting a little better. It's not nearly as volatile as the gold has been, because silver could just barely make the $19 level and then backed off a little bit. So as you can see, some of these are really dramatic, and we're seeing big things happening, folks. I mean, you're just seeing the tip of the iceberg unless you're looking at the foreign exchange market, because that's where the real money is being traded. It's just it's amazing what you can see here in some of these things. We'll take a quick look here at the Japanese yen, for example. You'll see the move that it had. We had between up and down in the thing, it was a little over $5,000. It's already rallied back quite a bit from the low we made, and that 61% retracement came in spot on at that 102 and change level. That was also one of those patterns that we like to look at, that 135 pattern. So it's had a pretty good rally off its bottom. But the one that is really interesting, because Arch Crawford was talking about the dollar index, and of course the euro, which has been one of the things that we trade and follow all the time, has had a move that is not quite for the record books, but it's getting very, very close. Let me see if we can get that one up here. Hold on one second. I have it here. I know I just brought it up. There we go. It's right here. And you'll see here in the euro, we had a tremendous move in the euro of about $5,000. In other words, it rallied 300 pips off the bottom, and then it went up and has come down and now is unchanged on the day. So that is another move of $6,000. 3,000 up, 3,000 down, and as you can see, it just missed the 61% retracement at 1310. It got to 1305, and then it sold off a little bit, but it did make an ABCD pattern at that time. So we're seeing just incredible volatility, and we probably will. I don't think there's going to be, there's a lot of, and the reason why markets see this volatility is because of the unknowns. We have an unknown person coming into the presidency. He's not a politician. That actually can be a pretty good thing, I think. We've had other people, I think, sometime in the history there must have been someone who was not a politician, going back to Abraham Lincoln, but we'll have to wait and see. But I believe the man has done a pretty good job in his business, and I think he's smart enough that he'll have some really smart people around him. That much I'm 100% sure. And, well, let's say 99.9%. But under any stretch of the imagination, that was the biggest upset in the history of American politics, going back to 1776 back in Philadelphia. So it's going to be interesting. As they say in the old Chinese curse, may you live in interesting times. The one thing that I am 100% sure of, that we live in one heck of a great country with wonderful people from all walks of life, and we are going to be fine no matter what. I really, really believe that. And this election, I think, proves it, that people will stand up to the government and say, hey, we've had enough. We can't take any more of you telling us what to do and, moving our money to Iran or whatever it happens to be. We've got to be able to take care of ourselves. And I think maybe we'll start healing and get back to work and, see some new bridges and other stuff. And I'll get off my soapbox now. I'm already starting to see people throw vegetables at me here in the den, but that's just how I feel. And remember, I have been up all night. I think I slept maybe a half an hour, but it was so interesting to me to see what was happening. And my lovely little bride had a scorecard of every single state, of each electoral vote, and she was able to see all these different places. We've traveled to many of these states, but some of them she's never been to, like North Dakota and Wyoming, and so it was interesting to see, where we're looking at, and New Hampshire, and places like that. I've been to Concord and a few other places, but it was too exciting. And if you were in the markets, I mean, I had my beepers on, tell me alerts when the prices would go, and no sooner than I would put one on, I had to, go to the computer and change it because it was moving so fast. I mean, it was really, really incredible. And the things that I were following, of course, were gold and the Treasury bonds and the S&P and the euro, and they were really moving. It was really something. It was, we don't see these very often, so it's worth staying up all night. What are you going to do? We'll see what happens, but that's just the beginning of what we're looking at here. So we're going to have Bill Koval on here at the break. I did want to mention one other thing, and that is, hold on one second. I think we have a caller coming in here. 1 second. Oh, we have a call from Clearwater, Florida. David, are you there?
Yes, sir. Good morning, Larry.
How are you, my friend?
I am, like yourself, tired, although I got a little more sleep than a half an hour. But, it was quite the excitement. It was wild. I think the announcers on MSNBC looked like they were about to you put on suicide watch. It was quite something to see. But anyways, getting back to the markets, if we could, looking at oil, it got stopped out last night on the spike down at around, I think it was right around about 9 o'clock or so, the 9:30 time frame. And it looks like it's hit the close to the 707 retracement off of the recent move. And then when we get down to a intraday, within let's say the half an hour, looks like it made a pretty decent little butterfly down on a 1.27 expansion compared to the move up at around 10:30 on the 4th. And I was just wondering what your thoughts were. I was thinking about if it comes back down and retests the 4307.
I like that. I think if you look at that 61% retracement off that 127, David, that's what I would look at.
Awesome.
Okay, thanks for calling in, my
Thank
friend.
you.
May God bless. Okay.
God bless
Stay
you
tuned
as well.
for Bill Koval.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Bill Koval from Scottsdale, Arizona, WDK Analytics on the line. Bill, how are you?
Yeah, doing good, Larry. I had no money exposed to the election, so I'm feeling pretty safe.
Well, you've been pretty bearish, and it certainly had a break of 120 S&P points last night, and we're we're rallying back very strongly right now. I posted your first chart in here. You want to tell us what you're looking at here?
Yeah, this one is kind of an example of the phrase indicators behaving badly, and specifically on the top part of that pane is a combination of the up and down volume ratio and up and down issues ratio. And true to form, you can see from that top at 2078, that's the S&P reading there. It's almost a straight down trend line, if you will. But in the bottom pane, the S&P 500 cash is making progress upwards in the face of that. And that anomaly can be explained simply by the fact that in a lot of these indicators, the way they're configured, they also take generous helping of small cap and mid cap issues in there, and those are the ones that tend to rise first and then fall first in market conditions. Mm-hmm. So what I'm doing in these two slides, this being the first one, is showing how to deal with those kinds of problems. And number one, what you're going to do is take your indicator history and map out over a year or two or three what the highs and lows are. And those are identified here by the red band and the green band on the bottom. And thus, if you take trades only at those bands, you'd end up doing pretty well. I mean, you're doing 3 trades here on this one over the span of 11 months, and your return is approximately 19%. So, not too shabby, really.
That's very good. In fact, the risk on these was very small too. So that's another factor that you like to see.
Exactly. Yep. I didn't even factor that in. Risk-adjusted return would be even nicer than that. Then on number 2, if you can pull that up.
Sure. Just give me 1 second. We'll be right there. It only takes me a second to do this. At least that's what I say. Given the fact that it's been a long night, it might take me longer. There we go. We're ready for chart number 2.
Okay. Here, they're flipped around simply by having the S&P index on the top pane and then the indicator on the bottom pane. This particular indicator is one that I developed. It measures the ratio of momentum between S&P 500 and the NASDAQ. And it looks almost worse than the other one, but, in the end, it comes out looking pretty good. And that purely and simply, again, relates largely to doing business on the edges, meaning the high and low excursions. I just show a couple trades there in the middle, or not in the middle, but in the lower pane, but they were pretty effective. They were large excursions. So very simply, that's the message of this group, and we'll go to slide 3 in a moment, but it's very powerful when you are not doing business in the middle of things, and that holds true of price excursions as well. I mean, if you're right in the middle of a 50-point range, you're going to get chewed up a lot. But if you're buying and selling on the edges of it, for example, your results are going to be generally much better. And here, in this case, just doing business on the edges, why this indicator that's, I mean, I looked at this chart, and I test these things every which way, and I wasn't very impressed with it. But when I ran through the numbers and avoided the middle, I mean, 29% in 11 months. That's not too shabby.
Especially when you're getting 0.5% on your passbook account. If you get that, that's an amazing thing. Now, Bill, how do you? What is your entry on when you have one of these? I notice you're waiting for extremes to occur, but what is the trigger point that you use for an entry? Is it crossing a previous day's high, or do you have is it proprietary, or how do you enter the market when you come up to one of these buy signals?
Well, there's probably several ways. What I do is I'll throw a moving average on here, a short moving average to try to catch the reversals. But I can't rely on that exclusively, so I've got a whole range of other indicators that track the market, not only breadth but new highs, and my God, a dozen plus others to try to understand whether on a micro level it's overbought or oversold. So I'll use the input from those supplemental indicators as well to determine where to place those bets. And that's an excellent question. And really, in the bottom line, I mean that's all it comes down to is knowing where to place those buy and sell orders.
That's true, because you have to be able to quantify your risk. That's for sure.
Absolutely. And then on number 3, this is a rather different indicator showing on that chart. If you focus on the yellow line, the yellow stair step, that is a volume indicator that I developed, which kind of simplifies this whole indicator thing in a way, because you don't have to do a lot of the other adjustments and pull in a lot of other indicators to see if you're dealing with a high or low or whatever. Here, this volume line, pretty much nails the tops and the bottoms of the swings, and it does so in a very, very easy to understand manner. I will use.
I have a question on.
Go ahead.
I have a question on this chart number 3. You have a red line that you're showing there that is very interesting. It seems to be a little more sensitive than the volume line. What is that red line?
The red is also another proprietary volume line.
Okay. Well, when they line up perfectly, that really sets it up pretty nicely, doesn't it?
Oh, yeah. Pardon me. It takes a lot of the mystery out of it, quite frankly. And then, furthermore, what I'll do is I'll use this particular chart on a lot of different time frames, and I'll use it to confirm or confirmations or divergences with indicators or with the index itself. So I'm triangulating a lot of stuff to try to make the best entries and exits.
Well, stay with us, and we'll have you come on and tell us how we can get in touch with you. Bill Koval of WDK Analytics, folks. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Bill Koval of WDK Analytics. And Bill, I've posted the information that folks can reach you to, so you can show them your newsletter and show them some of these indicators that you're using. So you want to just repeat it for people that are in their cars and stuff that they might be able to reach you. So what's the best way?
Sure, Larry. Well, the very simplest to get on the list for the newsletter, is the free list, is simply to go to wdkanalytics.com, and on the front page of our new website is a pink button, if you will, where you can just drop in your email address. Mm-hmm. This is timely now because we're getting ready to release a bunch of these indicators into the newsletter, which subscribers can follow each day then and trade along with them if they like.
Well, that's very good. You're doing some really great work, Bill. You should be very proud of what you've done. I think it's very different when you use volume the way you do, and not many people use it that way, and that's what makes it unique, and it certainly does follow the market very, very nicely. You've done a good job with the calls you've made, too, so you should be proud of that also.
Well, thanks very much, Larry. Now, I get a lot of inspiration from you over the years, and so.
Oh, you learn from my mistakes. Very good.
Well, also from your successes as well. I strive to be a big dog like you one day.
No, I'm an old dog. Hey, listen, I want to thank you for coming on, and we'll have you on again in a month or so. Okay?
Sounds good, Larry. Thank you.
All right. Thanks for calling in. Bill Koval of WDK Analytics out of Scottsdale, Arizona. Okay, folks, the New York Stock Exchange Index is not opened yet, but as you can see, we did make that pretty major bottom down in that area. Folks, it wouldn't be not unusual for this market to close higher and possibly substantially higher today. I know you might think that's a little crazy, but any market that can drop 120 points, we know this from old history, can go up 120 points. So just keep that in your, the back of your mind, that you don't want to be, don't want to be too much involved in what you think is going to happen with our new president-elect, because nobody knows. He's not a politician. He's a businessman, and he's a smart man. I don't think there's any question of that. And I think he's anybody that's got a family that nice can't be a bad man. That's just the way I look at it. I just don't understand how anybody can think he's the devil because he's got such a lovely family, and they're all very well. They had platinum spoons in their mouth, but they seem like they're reasonable people. Anyway, keep an eye on this New York Stock Exchange Index, folks, because if we do get stronger today. We're actually not very. In fact, I think we're about unchanged on the day now. It was what it looks like from the cheap seats here in Tucson, but it looks pretty good. We got gold selling off now. It's dropped actually $40 from its high, exactly $40. So that's given back quite a bit. The euro's given back all of it, and is now down on the day. So there might be big change of these winds of change that we have here in Tucson might be going all the way to Wall Street. So just don't get too overly committed because of what you think might happen. Trade what you see, not what you think, because these markets can move. Like Roy Longstreet always said, markets are seldom wrong, men are often wrong, and we always want to keep that, in our armamentarium to quantify our risk, because that's where that's the only thing you can control. And so you want to be able to control your risk the best you can. But right now, we've come back really strong. We live in a great country. There's no question about it. I mean, that move last night was just totally blown way out of proportions. And, it was only limit down for just a few minutes at the most. And I'm talking 1 or 2 minutes. That's about all it was. And then buying came in, and we've rallied 700 points in the Dow, and we've rallied 90 handles, 100 handles. We're exactly 100 handles higher than the bottom. So we went down 5,000 and up 5,000. So we're seeing volatility, pretty much like we're looking in some of these other markets too. So my advice is that just don't let your TVs try to tell you what to do, because these markets will have a tendency to go where they want to go, and you don't want to stand, in front of a freight train. That's the main thing. Over the years, I've seen things like this happen where the market rallies and makes a new high and then turns around and makes a new low. So, these are things that happen in these markets. And remember, last night, it's relatively thin because not many people, only the crazies were up all night. And there's a few of us, but, Europe was trading pretty heavily, as was Asia. But, most of the people were sleeping. They didn't know what was happening. That's why I tried to send out 2 or 3 times during the night to alert them, things that were happening in gold and treasury bonds and the euro and the S&P, just to show you how the election was, working out as far as financially in some of these markets, because they were putting the fear of God in the stock market for sure. That's one of the main things that you want to keep in mind as you're, looking at your charts today. And one of the things that I posted in the room, you'll notice that on the electoral count, when he got to 222 on electoral count, we got a big laugh here in Tucson because of the Gartley 222 pattern, which we thought was rather his final count, I guess, was which was 289. So, and we're up on the day now. So we've gained everything we lost last night. So there's a perfect example of the market that can take 120 away from you, can give you 120 back. So you just have to be very flexible in these markets, and that's what you really try to do. The gold, it's given up too much, folks. We're now down $50 from the high. That's a $10,000 move. Actually, a little more. We went up we have $70 up, $50 down, $120 move in gold, which is $12,000. And we're seeing just monster moves everywhere. So just be extremely careful in here. My suggestion is, wait one day, because things are going to be okay no matter what. But, we're approaching the highs that we made near that 2150 level. And that would be if it closes above 2150 in the S&P, that would be a pretty substantial move, because you'd be back at a 61% retracement of the whole move down. So it's going to be interesting what happens here over the next few hours and days, that's for sure. But we're going to see great volatility, and that's what we really like to see here. That's the main thing, is that we are going to see that. So keep that in mind, that there's going to be some terrific opportunities in here. Hopefully they won't be in the middle of the night, but there will be some great opportunities without any question. We do have a grain report today. Rich Anderson is still tied up this week. Next week, we hope to have Rich on because, he's just working with someone who is fighting the big C, and we'll see. Well, here the New York Stock Exchange Index actually opens higher for the day. So there's another example. Well, actually opened about unchanged. So it's also left that big gap that we had here from November the 4th. So this market is not looking nearly as bearish as some people thought it might early this morning. So we'll watch to see how it ends up. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'd like to show you the Bradley model. As you can see here, we are over this date here. Now, what this doesn't show, because this is the Dow Jones, it doesn't show the overnight move where we were down 830 points. Now we are up 50 points, so we've had a 900-point swing in the Dow Jones. Maybe they're looking at the new president-elect as possibly something that could be positive to Wall Street. So just keep in mind that these markets have a mind of their own, and don't stand in front of them, if they go away that you're not expecting. So we'll see what's happening. The problem when you're trading some of these markets is that unless you're up all night, you're not, and you have access to overnight trading. And some of these things like ETFs and things like that, you do not have access to overnight trades. And that makes it, very, very difficult to move out of your position. Just think for a minute, if you were in the stock market and you went to bed last night and you woke up this morning, you would have thought that Hillary Clinton had won if you'd looked at the market. But in fact, there was an incredible move last night all over the world, in Hong Kong, in Shanghai, in London, in Germany. All of those things were, all going wacko, and now they're settled down. People are starting to reassess what their positions are, so we rely on the technical things, and we'll see how this market works. But the S&P should have some pretty strong resistance up in this 2150 level. We're not very far away from it right now, but if we close strongly above that, we could be looking at new highs very, very soon in the market. And, look at gold. It's had a $10,000 move, more than that. We've had $67 up and $46 down, so you're looking at $11,000 move there, and the Treasury bonds a $13,000 move. So there's big money moving, and the euro's down on the day now. The dollar index is strengthening. So all of these things are telling us that there's big changes coming, and I believe they'll be for the good. We won't know until probably 6 months to a year down the road, but it certainly can't get any worse. That's the bottom line. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.